Here in this video, we will be going over what to expect coming tomorrow. Tomorrow has the potential to be a huge day for Tesla, because let me give you a little bit of a backstory here. We started off 2024 with the expectation of 6 rate cuts. That quickly started to fall. You got down to a point where you're only expecting 1 cut, maybe 2 cuts this year. That is because inflation for January, February, and March came in hotter than expected. If April comes in on the low side, the markets may start to expect more cuts. We also have other data tomorrow, which could further exacerbate this, whether it's positive or negative for Tesla, and we'll talk about that as well in this video. Tesla's stock started off 2024 around $260 and some change, around $265. 2024 was a bad year so far for Tesla because of what I just mentioned. I mean, you were going from expecting a Fed that was going to pretty aggressively be cutting rates down to maybe they're not going to cut at all. Maybe they're going to raise rates. Of course, Tesla did bad. Well, what we've seen over the last couple of days suggests that maybe CPI will come in on the light side. You've definitely started to see some more risk-on behaviors in our markets, and I will highlight that as well. Not to mention, Jerome Powell spoke today, and he gave us a pretty good insight in what maybe CPI could look like tomorrow. So I will go over all of that, my expectations for Tesla stock, give you a technical breakdown, and much more here in this video. Hit that like button as well as subscribe to the channel if you are listening to my voice, if you own Tesla stock and or you want Tesla stock to go higher, which I imagine is like 95% of you guys. So first things first, Tesla stock had a great day today, up about 3%. That is because of a couple different things. One, you have seen in the last couple of days a real risk on kind of behavior in our markets, and that is because, I mean, maybe CPI is going to come in light. Maybe that's where you should be positioning your portfolio. But really, GME and AMC have kickstarted a lot of this enthusiasm into small caps and speculative stocks. Tesla included has benefited from that, I would argue, over the last 2 days. Yesterday, Tesla stock was up 2%. Today, Tesla is up almost 3%, really with no significant company news that would correlate to a 5% rally. And if this is a trend that continues, if CPI does confirm that maybe the Fed could be cutting rates faster than expected, well, I think the shorts are also in a very bad position in Tesla stock, because the short position in Tesla is at multi-year highs. And Tesla is indeed the last stock that I would want to be short in if we're actually heading into a Fed that is going to be a lot more accommodative, that is cutting rates. I mean, take that short trade if you want to, but I wouldn't want to do that personally. But more on all of this later. Today, you had 10-year Treasury yields that fell over 2 basis points down to 4.457%, which you're coming off of your high that you set recently at about 4.70%. So you have seen quite a drop here in 10-year Treasury yields in the last couple of weeks. And this is again fueling a lot of that risk on behavior that we are seeing in the markets. New Edge Wealth on X wrote this: markets reacted initially negative to PPI, but when details like auto insurance, medical care, and airfare showed a mild reading, yields were unable to break the range. That means to the upside, right? Yields fell on your 10-year Treasury, as I just showed. The silver linings in services have traders on alert that CPI could be a downside surprise. Now, current expectations for CPI on your core month over month are expected around 0.3%. Last month, you came in at 0.4%. So if you come in on the low side of 0.3%, that's going to be great. And what I mean by that is there's a low side and a high side, because we just get the round number, and that's what algos mostly react to. But hear me out. If you come in at 0.25%, it's still going to show up as 0.3%. That's on the low side. That's close. That's in the middle, basically, of 0.2 and 0.3. If you come in at 0.34, that's on the high side of 0.3. That would be bad, right? And if you come in at 0.35 or higher, you're going to round up to 0.4, and that would be really bad. So if you come in around 0.25, 0.26, that's going to look like 0.3% when you're looking at the newswire or you're looking at trading economics or just the headline numbers themselves. But under the surface, that's actually going to be some good news. Now, if we come in at a high let's say 0.24, you're going to get rounded down to 0.2, and that's going to look like on here just outright coming in better than expected, which that would obviously be great news. Now, PPI this morning came in at 0.5% for your core and for your headline. And Wall Street's kind of chalking that up to certain components within PPI that don't necessarily translate into CPI or PCE. But this is also getting people excited. Last month, PPI on the headline was 0.2%. It was revised to negative 0.1%. Same is true for your core PPI month over month. It was 0.2% last month and was revised to negative 0.1%. So the deflationary, not even disinflationary, but deflationary pressures were relevant last month with PPI. So that was also a pretty strong sign that maybe we will start to see some disinflation here in the next coming months. Furthermore, adding to that was Jerome Powell today. Jerome Powell gave a speech at about 10 o'clock in the morning. This morning, Eastern Standard Time. Fed Powell said it looks like it will take longer to get inflation confidence. But then he said we've made real progress on inflation, suggesting that maybe that inflation number tomorrow is going to come in around expectations, if not lower, but definitely not suggesting a miss on CPI. Keep in mind, Jerome Powell has been very open and public about this. They get the data before the markets do. So Jerome Powell giving a speech today saying what he said, well, he probably, we can't know definitively, but it's a safe assumption that he most likely already knows what the CPI numbers are going to be tomorrow. Jerome Powell said the Fed is confident that they will get to 2% inflation. He said non-housing services inflation is the one that may take the longest. Powell says that it's non-controversial to say U.S. fiscal policy is on an unsustainable path. Jerome Powell also acknowledges that lags from current rents to CPI is longer than they thought. He goes on to say the housing inflation has been a bit of a puzzle, and they're really not sure why the current market rents are being factored or not being factored into CPI, why we're still getting such a high housing number in your inflation reports when in all reality, there's not a lot of rent inflation out there today. But this is one of the quotes that probably sent the markets higher, especially the small caps, and subsequently sent 10-year Treasury yields even lower. Fed Powell says, I don't think it's likely that the next move would be a rate hike. It's more likely that we would hold the policy rate where it is. Jerome Powell also says restrictive policy may take longer than expected to do its work and bring inflation down. Jerome Powell says, I wouldn't call the PPI reading hot, but sort of mixed. So these are some of the headlines the markets reacted to and took them as favorable from Powell. Again, most notably, Jerome Powell's not even talking about needing to raise rates again. All he's saying is we need to be patient and let policy work. And odds are the next move is a cut from here, not a rate hike. Fitch Ratings just said today, decelerating income growth will dampen U.S. consumer spending in the second half of 2024. Morgan Stanley, in a note today, said recent credit card delinquency data is, quote, encouraging. Year-over-year growth in card delinquencies slowed across the broader group in Q1, a clear indication that we are past peak deterioration. We expect growth to continue slowing on a year-over-year basis, eventually contracting around year end. I think that's a pretty strong statement to make based on Q1 credit card delinquency data. past peak deterioration, I wouldn't say that makes any sense at all. Based on the data that we have seen for durable goods, for GDP, for metrics of consumer spending, you haven't even started to really see the deterioration. So I don't think it's fair to say you're past the peak of the pain, if you will, for the consumer. People are running out of money and they're not spending as much as they once were. That's obvious. Companies are telling us that. Be careful, long story short, what you hear from Morgan Stanley or Goldman Sachs or some of your overly bullish banks. Remember, they're trying to sell you things, investment products and savings accounts and things of that nature. And they do have notoriously terrible track records for being correct on the economy. Now, coming out tomorrow morning at the same time you get CPI is also retail sales month over month. Now, this one's going to be an important one for the state of the economy as well and the overall consumer. Now, last month you came in at 0.7%. There's going to be another revision here, so that can be important. But the forecast is 0.3% month over month. If this number comes in bad, let's say it comes in low, and inflation comes in low, that's probably the best possible outcome for stocks. Now, imagine a scenario where inflation falls, comes in lower than expected, but retail sales is like -2 or 3%, something really, really bad, then obviously that's going to be seen as probably bad news. That's really going to jump the odds of a cut coming this summer. But in the grand scope of things, if the economy does start to weaken and it does look like we're going into recession, well, that's not going to be good. Current expectations for the next Fed meeting are that the Fed is not going to do anything. 91.3% chance of a continued pause, 8.7% chance of a rate cut. If you get really bad data that starts to come out between now and June 12th, then it's possible you could get a cut, but I think the data would have to be pretty bad and the inflation data would have to be pretty good. Now, I'm expecting the first cut July 31st. Markets currently are not, so I think this could lead to some upside in stocks if we start to expect a rate cut because inflation falls, not because the economy weakens. Remember, if we start to expect more cuts because the economy is weakening, that's not good, and that will never be good for stocks. If inflation falls, great, that's awesome, as long as the economy holds up. The July 31st Fed meeting has a 29.2% odds of a cut. So that is not consensus view. About 1/3 of traders on this Fed Fund futures contract for July 31st are expecting a cut. 68.6% of investors are expecting no action from the Fed at all. You are pricing in your first cut coming September 18th, 2024, 49.7% odds of that, and 32.9% odds of a continued pause. There is 16.2% odds of 2 rate cuts by September, and then by December, you're expecting the second rate cut at 36.2% odds, 31.9% odds of just 1 cut, and 10.2% chance of no cuts at all in 2024, whereas there is a 17.9% chance of 3 rate cuts this year and a 3.6% chance of 4 rate cuts still this year. So I do think tomorrow's CPI numbers are going to be massively important for markets because typically Wall Street likes to say 3 months makes a trend. So you've seen January, February, March, CPI numbers, inflation readings coming in hotter than expected. You're kind of starting a trend of inflation resurfacing again. If April also comes in hot, then that's going to further validate that inflation is probably here to stay. If inflation does come in lower than expected, you're going to probably need 2 more inflation reports before the Fed felt confident about cutting rates. And that's why the markets are expecting September. If the economy does weaken, then obviously that could push along getting rate cuts coming sooner. But if inflation does indeed fall tomorrow, I would expect that would be very positive for stocks as long as retail sales do not come in at a terrible number. Fear and greed index over on CNN today is at 53, which is considered neutral, almost in greed territory. Yesterday, you were at 49, which was also neutral. So you're up 4 points today alone. You have market momentum that is in greed territory, stock price strength that is in extreme fear territory, stock price breadth is neutral. Put and call options is extreme greed today, so people feeling pretty dang bullish heading into CPI numbers coming tomorrow morning. Market volatility is neutral, and safe haven demand is in fear. Junk bond demand is also sitting at neutral. We'll have some earnings today in after hours with Nubank. That's one of the banks backed by Warren Buffett, Brazilian bank, I believe. Next Tracker, On Track Health, Dragonfly, DHT, Canoe, Rumble, Tasha. None of these companies are going to be important for the broader markets, though. Tomorrow morning, you have Dole. That could be interesting for food price inflation, but really not much of anything tomorrow morning either. Tomorrow and after hours, you have Cisco, Copa Airlines, a couple other smaller companies, but nothing too major there. Also, Thursday pre-market, that's actually your big day. You have Walmart that reports earnings, Baidu, JD.com, John Deere, Nice, Lightspeed, Under Armour, ADS, Canada Goose, all kinds of different companies that report Thursday pre-market. Now, Walmart's obviously your big one. Walmart has by far the best color into how the consumer is spending their money. If they're cutting back, if they're, still spending a lot. Based on what I can tell, based on what you've heard from McDonald's and Target and Dollar General and all of these other companies that are heavily dependent on how the consumer is doing directly, they've all been warning about a slowdown in the consumer, that the consumer is pinching pennies, as a lot of them have said. If Walmart confirms that, I think that is a smoking gun for the economy and for the consumer. If Walmart comes out and says people are just doing fine, like they're still spending money, they're not going crazy, but they're not really cutting back, that's great news for markets. That is fantastic news for markets. If Walmart comes out and gives a warning about the consumer, that the consumer is slowing down, that Walmart's profits may also slow down as well, that could be like another, August 14th of 2007 moment where Walmart comes out and really warns markets and warns about a slowdown in the consumer and subsequent recession. So I am personally paying very close to Walmart earnings Thursday pre-market. I think a lot of other people are as well, and that it could be one of those, I guess, underlooked catalysts for this week that you need to be prepared for coming on Thursday. TLT is up 0.5% today. Oil is down 1.43% today, and the dollar is down about 0.2% today. All of this suggests that maybe a weaker than expected inflation number is coming tomorrow. If indeed that does happen, I think short sellers in Tesla are in a world of trouble. If the economy does hold up and inflation falls, that is the best case scenario for you as a Tesla stock investor. If we can start to price in more cuts from the Fed, not based on something breaking or the economy getting worse, but because inflation is falling, that will be very good for Tesla. And I would expect Tesla could have a 4-5+% day tomorrow. I think a lot of it will depend what happens with AMC and GME as well. Don't underestimate how much enthusiasm that is bringing to some of your heavily shorted stocks. Tesla's trading more so along the lines of a small cap momentum stock right now than other big tech names. And I get it, Tesla's not going crazy. It's not up 10% 2 days in a row. So it's not nearly as extreme as GameStop or GME. It takes a lot more money to move Tesla, but there's definitely some of the same kind of similar logic that is being applied to Tesla and just your heavily shorted stocks. Lucid is a lot smaller company than Tesla, and Lucid has also been outperforming. It seems like any stock that is heavily shorted right now is starting to do better, and that's because some shorts are likely starting to unwind some of their positions. Now, I don't think that's what's happening with Tesla. The data does not support that, but it is possible. Tesla is still sitting with multi-year high levels of short interest. Short interest of free float approaching 4%, currently at about 3.87% on Ortex. S3 Partners is reporting a number closer to about 3.95%, so a little bit higher than Ortex, so these numbers could be a little bit more on the conservative side. You have $18.42 billion currently in short positions, as well as 107.19 million shares that are currently sold short. So based on today's 3% rally in Tesla, short sellers are losing over $500 million today alone. Let alone if Tesla has another great day coming tomorrow, short sellers are going to start losing a lot of those profits that they had previously. And I think justifiably, if we do get a low CPI number tomorrow, Tesla stock likely jumps into the 180s, if not potentially even into the 190s over the next, coming couple of days. Now, further than that, looking at like next week and the week after that, there's obviously going to be different data points and different earnings that will be coming out. Nvidia will report earnings next week as well. That will also be wildly important for stocks. But this could start a rally that could send Tesla well into the 200s again. And the way that I really think about things right now is, number one, from the perspective of everyone was starting to get bearish on Tesla. That was clear. I mean, the bears were out in full force before Tesla's earnings. Now, a lot of people still have not bought back their position in Tesla that they sold out of, that they planned on buying back. So I think you could start to see some retail investors buying back Tesla, as well as hedge funds and institutions that maybe sold before Tesla's last earnings. I think if you then add to the fact maybe inflation comes in lower than expected and short sellers have a multi-year high short position, that could set you up for a very large rally in Tesla. I think the writing is on the wall. The question is, how does the data come out tomorrow? And also keep in mind, you're seeing a lot of unusual option activity targeting $270 or more for Tesla stock by that June 21st expiration, which, I mean, I'm not going to go out on a limb and say that's going to happen, but it's certainly a possibility. And it seems like someone with a lot of money is positioning for that. I am expecting a big move coming tomorrow. Now, we've talked a lot about the bullish potential outcome for tomorrow, but if the number comes in hot, Tesla's probably going to fall back to the 171 level, right at about that 50-day moving average. If you don't find support there, you'll likely find support at the 20-day moving average around 169. If the number somehow comes in really hot, then you'll eventually fall back to that 161 level. And, I would just be a little bit careful of people, throwing out large numbers. Tesla stock was just in the 130s. We made a lot of improvements in the overall thesis of Tesla since Tesla's last earnings. I'm trying to figure out how to word this correctly, but people were overly bearish heading into Tesla's last earnings, and a lot of those fears were alleviated, and I think that did change a lot for Tesla. But let's say tomorrow was a bad day for Tesla. If you fell around 3.3%, that would take you back to your 50-day moving average. If you fell, let's see, about 4.3%, that would take you back to your 20-day moving average. So for Tesla to fall down to, let's say, 160, that would be close to 8.5% drop. Is that possible? Of course. But is that likely? Probably not. I will say, though, with the NASDAQ up 0.5% today, with small caps outperforming the way that they have over the last couple of days, you're not set up in a great way heading into tomorrow's data, if it is in line with expectations or if it is slightly on the hot side, because you've already rallied the last couple of days. Preferably, you would want to see stocks sell off into a big data report like tomorrow, so then you can rally hard when the data does come in line with expectations or better than expectations. So let me know what you think about this information down below in the comment section. Are you bullish? Are you bearish heading into tomorrow? What is your expectation for Tesla, and what kind of trades do you have on Tesla and or just the data coming out tomorrow? Do you have calls? Do you have puts? Are you kind of waiting, just sitting back, seeing what the data comes in as? How are you trading this? Let me know down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a fantastic rest of your day, and I will see you in the next one.